No surprise from the Bank of England, but when is more easing in sight? The Bank of England has kept rates on hold ahead of a budget that's expected to raise taxes across the board. Rachel Reeves paved the way in a speech earlier this week, saying she faces hard choices to protect public spending while also reducing Britain's debt. She made it very clear she wanted to see the central bank cut as soon as possible. So when is she going to get that reduction? Chris Beauchamp is chief market analyst at IG. Chris, no surprises then, but with inflation steady and the job market looking increasingly weak, wasn't there a case to cut?
There was, but perhaps not as strong this time. I think if you look at the inflation data, obviously it's moving in the right direction, and the committee minutes really confirm that. But I think maybe it was a case of you don't want to base too much off one inflation print. Now, between now and December, when the BOE next meets, we get two more. So I think they'll be on more secure ground when it comes to cutting. Now, of course, the vote was supposed to be expected to be 6-3, and it was actually 5-4. So in a sense, it really is more of a dovish tilt than we perhaps were expecting. It just wasn't the cut that, as you say, the Chancellor perhaps would have liked to see this time around.
As you say, almost a 50-50 split there, so they're not quite on the same page as each other then about the strength of the UK economy.
No, there's still a couple that think there is still the possibility of a surge in inflation. But I think you can clearly see, and arguably Andrew Bailey was in the camp to hold, but probably is tilting quite quickly into the other side of the line on that, really. But it does look like that this is all about inflation, and it does look like really the committee thinks that prices will continue to weaken from here. I suppose the problem for them is that a good weakening of prices just because the natural elements are receding, or a bad weakening in that demand is beginning to dry up? And that's what's going to trouble them over the next 6 weeks or so before they meet again, and what they'll look for in not just the CPI figures, but all the other data we get between now and then too.
Do you think Rachel Reeves' explicit call for a cut just 2 days ago made it less likely? Are policymakers worried about being seen as too political?
Well, it is that way. I think we had this debate, of course, around Trump and the Fed back in August. Clearly, the UK's policymakers aren't as biddable as their American counterparts. Perhaps it's unfair on Jerome Powell and his team, but certainly, or perhaps Rachel Reeves isn't as strident as the President of the United States, which is definitely true. But I think it was just a case that really the line wasn't there enough to move this time around. And perhaps, of course, the BOE is as in the dark as we are as what comes to the budget, perhaps as much as the Treasury team themselves at the moment. So moving too soon might just, again, you still want to preserve this element of independence, I think. And while no one would suggest that the BOE is under number 11's thumb, it's always good to maintain that sort of clear blue water, if you like, for the benefit of global bond markets.
Ahead of the budget, UK gilts have seen a big drop in yields in the last month, but investors clearly still want to see Rachel Reeves give herself more fiscal headroom. What do they want from the budget?
Well, I think they would like to see spending cuts as well as the tax rises that everyone really knows are coming. I think they may not get as much, but there appears to be a sense that, okay, we can't get the spending cuts because the political weather doesn't allow for it at the moment. But as long as you give yourself headroom and you use that headroom sensibly for things like investment to try and boost the economy over the longer term, we're happy with that for the time being. That would be the message, I think, from bond markets, really. But it is still a case of, but don't step too far out of line, because the situation remains precarious for the UK financial situation.
Have they then fully priced in a rise in income tax across the board? Will markets punish her if steep tax rises are not delivered then?
To an extent, yes. I think having really cleared the way for it in a slightly odd speech earlier in the week, it would be remarkable if she then did the unexpected and didn't raise taxes on income. And of course, taxes on income, even for middle earners, are, though uncomfortable to say, at the lowest level in about 50 years. So there is room on a historical basis. It will be politically unpopular, but I suppose the gamble they're taking is that they can then do more with that money to try and restore their popularity once we get closer to the next election.
That was Chris Beauchamp of IG. Don't forget you can watch more videos on Reuters.com.